Coming up on Market to Market, the threat of tariffs with China causes angst in rural America. The renewable fuels industry cries foul over EPA's waiver handout. And market analysis with Tomm Pfitzenmaier next.
There's a lot of potential, unless there's some dust up on.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, April 6th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. To tariff or not to tariff, that was the question this week from Beijing to Washington. U.S. manufacturers report slower expansion in March as they were having a tougher time getting supplies to fill orders. The unemployment rate remained at 4.1% for the 6th straight month. The Business Conditions Index of mostly 9 Midwest states revealed a rate above growth neutral for the 16th straight month. The trade deficit, long cited as a burr in President Trump's saddle, rose for the 6th straight month, reaching the highest mark since October of 2008. Harry Truman wanted a one-handed economist as he was tired of hearing his economists repeatedly saying, and on the other hand. Global trade is incredibly complicated. The president's trade representative is already trying to finish a year-long reworking of NAFTA. Mr. Trump also instructed his Secretary of Agriculture late Thursday to implement a plan to protect farmers and agricultural interests. David Miller leads our coverage.
2 weeks ago, despite warnings of a trade war, the U.S. threw the first punch in its fight against alleged intellectual property and technology theft with a haymaker worth $50 billion in tariffs. China countered with a $3 billion salvo, mostly for pork products, and hinted U.S. agriculture was square in Chinese sights. The U.S. responded this week with a long list of items that included semiconductors, car parts, and machine tools. In less than a day, China unleashed a roundhouse matching the power of America's initial blow, with U.S. agriculture taking the brunt of the attack. President Trump returned fire with an additional $100 billion in tariffs.
China does not want a trade war because there will be no winner in a trade war. If someone insists on starting a trade war, China will fight till the end.
The National Corn Growers Association and the Iowa Soybean Association agree there are no winners in a trade war.
So I think there are ways to resolve it, but it's going to have to be in a way that saves face for the Chinese, as they would call it, and it's going to have to give the president some win. Let's hope they find that solution.
The catalog of U.S. goods slated to be charged a 25% tariff now comprises more than 100 items, including a laundry list of agricultural goods that could put beef, pork, corn, and soybean exports in jeopardy. The response from other industry trade groups was almost immediate. The National Cattlemen's Beef Association said the unfortunate casualties of a trade war would be America's producers and Chinese consumers. The National Farmers Union expressed concern, saying there was no plan in place to protect family farmers and ranchers who are always the first to suffer from retaliatory tariffs. Commerce Secretary Wilbur Ross was quoted on CNBC as saying, "This $50 billion that they're talking about amounts to about 0.3% of our GDP, so it's hardly a life-threatening activity." Larry Kudlow, the newly minted head of the White House's National Economic Council, cautioned against panic and said the president wants to grow the American economy, not to hurt any of its sectors.
This should not be viewed as strictly mano punitive damages, that kind of thing. This got to be viewed in the context of economic growth, which is what this administration is all about. And that's the end game.
Even though Chinese tariffs will only be levied if the U.S. makes the first strike, early trading on Wednesday saw commodity markets plunge more than a dime in the nearby corn contract and a whopping 40 cents in the May soybean contract. Markets rebounded after the initial shock wore off, but remained lower. U.S. farmers and ranchers are aware China is unable to feed all of its 1.3 billion citizens with domestic production. Chinese markets take about 1/3 of American soybean production, making it the #1 destination for the U.S. harvest. The nearly 1.4 billion bushels are valued at around $14 billion. U.S. pork producers exported an estimated $1.1 billion worth of product to China in 2017 and stand to lose significant market share.
This is not a very good place to be in a trade war. They're unpredictable, the duration, the impact. So I'm a little taken aback by this attitude that's come from the White House. It's a very serious matter, and Iowa is going to be the first casualty. Agriculture, Iowa, soybeans, pork. This is what's going to hit the hardest. And so the target is on farmers' backs, and it's a very bad place to be.
Many agree that tariffs are targeted at rural America, the main source of votes credited with electing President Trump.
Chinese clearly selected soybeans to send a message to the Trump administration. We know your politics. We know this will have impact on the people that voted for you. I don't think there's any doubt about it. So based on that, yeah, I think agriculture is going to pay perhaps a disproportionate share of the burden or the cost of this potential trade war.
U.S. Secretary of Agriculture Sonny Perdue stated that farmers would be protected and that the president had some tough decisions to make. This was echoed by other members of the Trump administration.
We are trying to put in place measures which will have the backs of our farmers and our ranchers and everybody else in this country.
Give us some time to play this out. And I might say not only in consultation with China, obviously, but in consultation with the ag community, in consultation with the manufacturing community, the auto community. You see, it's all part of a, fairly delicate, broad-based negotiation, but it's long overdue. That's all I'm saying. We can fix this thing. It's going to have a great ending.
Kudlow later stated U.S. Trade Representative Robert Lighthizer was working behind the scenes to start negotiations with the Chinese. As of now, Chinese officials say nothing will come to pass unless the U.S. makes good on its threat to enact trade tariffs. Official U.S. documents show a hearing on the matter will take place on May 15, which will be followed by a one-week comment period. No matter the final outcome, Leeds is concerned about the long-term effects of the confrontation.
Is the potential for anti-Americanism to continue to grow. Again, I've been going to China for many years. It's certainly more prevalent now to see this anti-American mindset. And the Chinese have a history of getting into disputes with other countries, and it impacts the way consumers view the world.
For Market to Market, I'm David Miller.
Early this week, the head of the Environmental Protection Agency announced a rollback in Obama-era mandates easing emission standards. The 2025 levels required new vehicles to achieve 36 miles to the gallon, a 10 miles per gallon increase over the existing mark. The demand for fuel could rise as less efficient vehicles will still be on the road, but homegrown fuels will likely have a tougher time meeting that need, as Josh Bishner reports.
This week reports that some oil refiners sidestepped the renewable fuel standard by obtaining Environmental Protection Agency waivers, granted in secret, drew backlash from farm country. The department exempted about 20 facilities of their 2016 biofuels requirements, at least 25 for 2017, and are said to be weighing several others. Midwest lawmakers and agricultural interests have viewed any step back from the RFS, including the blending of predominantly corn-based ethanol, as breaking a campaign promise.
The RFS, which is Renewable Fuel Standard, is an important tool in the mission to achieve energy independence for the United States. I will do all that is in my power as president to achieve that goal.
Under a rarely applied federal law designed to buoy operations producing less than 75,000 barrels of oil per day, Endeavor, one of the nation's largest refining companies, received waivers for 3 of its portfolio of 10 refineries. According to the U.S. Energy Information Administration, Endeavor's 3 plants are capable of producing 2.3 billion gallons of gasoline annually. In 2017, the Texas-based refiner posted profits of roughly $1.5 billion. The revelation sent prices for renewable identification numbers, or RINs, spiraling to their lowest level since 2015. RINs are the credits generated by renewable fuel producers that allow obligated parties with limited blending capacity to adhere to federal law.
Small business owners shouldn't be forced to sell an unwanted product just to meet Congress's decade-old prediction about biofuels.
The oil industry has long sought government reform of the RIN program, saying prices for the certificates fluctuate wildly, creating an undue financial burden. As further proof, they point to a recent controversial court decision which allowed Philadelphia Energy Solutions, the East Coast's largest refiner, to avert bankruptcy by blaming RIN compliance as a major contributor to its insolvency. For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
Reaction to China's call for tariffs on U.S. commodities was quick. Markets tumbled early Wednesday, but fundamental news helped fend off greater losses. For the week, May wheat was a big winner, gaining 21 cents. The nearby corn contract added a penny. Soybeans got caught in the tariff talk as the May contract declined 11 cents. May meal added $2.30 per ton. In the softs, nearby cotton improved 108 per hundredweight. Over in the dairy parlor, May Class 3 milk futures were 45 cents higher. The livestock sector was mixed again as the June cattle contract lost a quarter. May feeders expanded 160 and the June lean hog contract shrank 327. In the currency markets, the U.S. dollar index declined 6 points. Crude oil lowered $2.88 per barrel. COMEX gold added $8.80 per ounce. And the Goldman Sachs commodity index moved 9 points lower to finish the week at 443.15. Joining us now to offer insight on these and other trends is one of our regular analysts, Tomm Pfitzenmaier. Tom, welcome back.
Thanks, Delaney.
Well, as we saw there earlier in the program, we had some big news continuing this week that had a lot of moves in the markets all across the board, really. But let's talk about the bear in the room, which is obviously the retaliation or potential retaliation that China is going to have or impose on the U.S. here. When we look at what's been happening, is this just a psychological move from the U.S. and China to try and get us to bend a little bit, or what are your thoughts on it?
Well, that's what I think. I mean, if you sit back and think about it, we don't sell them any corn anyway, so why would corn react? And like you said a minute ago, corn closed up a penny on the week. So the corn fundamentals, I don't think, are affected by this all that much. Soybeans, which are supposedly the ones that really bear the brunt of it, we're only down 11 cents, so that's not terrible. And meal is actually higher, supported by, I think, the poor crop in Argentina. So, you know, there's a lot of talk, a lot of uproar, a lot of volatility, but in the end, things didn't really change all that much. And I think the fundamentals of all those markets kind of came to bear really by the end of the week.
I think the other big question we have to ask ourselves and ask you specifically is, do you see this actually coming to fruition? Do you think China will actually impose these tariffs?
If we do, they sure will.
Okay.
Yeah, I think that's absolutely true. Now, again, it doesn't affect corn, where they don't buy much wheat from us. Soybeans, they're already, for the next few months, anyway, probably going to buy a lot of beans from majority of their beans from Brazil. You know, we've got a lot of time to sort this all out. We've got a crop to get planted. We've got a supply-demand report this coming Tuesday to get sort of sorted through. So there's a lot of other stuff to talk about besides that, something that may or may not happen down the road a ways.
So every wheat was listed on that tariffs list, but they didn't really react to the news. Were you surprised by that, and why did wheat not seem to rally on that impact?
Well, I think wheat's, again, going back to that, you've got this cold weather. How is this winter wheat going to come out of dormancy? Is the cold weather going to ruin that crop? Are we going to be able to plant the spring wheat? How is the European wheat crop going to come out of dormancy? So again, there's a lot of fundamentals in the wheat market that I think the trade's watching. Export demand for U.S. wheat hasn't been all that spiffy anyway. So yeah, I think we were pleased to see wheat up 21 cents this week. I think you could see some follow through on that because of weather issues. But you start getting wheat up around $5 and maybe up to $5.20. I think you'd have to start a run out of your bullish enthusiasm and maybe make some sales on wheat.
Okay. When we look at Wednesday's announcements and how they affected the corn market, we had a huge reversal. We've had a high this week of 416, a low of 396. Which side do you expect us to break out on?
The upside. I think the fundamentals on the corn market are pretty good. I have very little interest in selling corn here for a while. I mean, if you have reduced acreage, we've got really good export demand for corn. Ethanol, despite these little dust-ups we've had, ethanol industry has been pretty solid. Obviously, we've got wheat, cattle, and hog prices because there's a lot of them around, so they're eating a lot of corn. So the the demand side on corn's solid that way. And if we have any dust up this summer on yield, I think you could see at least challenge last summer's highs at 428 on the December contract. So I guess I'm holding out and believe that 416 is probably going to be nudged out.
Okay, and you're watching 428 to be clear on the December contract? Correct. Okay. What about export sales? We've slowed a little bit this week from previous weeks. Where do you see them heading?
Oh, I think they'll be fine. I think that was just a one-off week.
Okay.
I think we'll continue to see a good export. I mean, nobody else has got corn to sell that's competitive till June, really. So I think you know, we've been lagging. We lagged a little behind through the winter, but we're catching up. And I don't know that we're catching up enough that the USDA is going to make any changes on their export projections on the report next Tuesday. But I think their numbers are probably pretty solid at this point.
And when we look at ethanol specifically, ethanol production has been running higher, even with some of these threats with China going on. Do you expect us to see the ethanol production rise on Tuesday's reports, or will we remain the same?
No, I think they're going to leave their ethanol numbers about the same. I mean, ethanol production has been decent. Stocks are starting to pull down, which they normally do this time of the year. We may lose some ethanol export business to China, but other countries are picking that up some. So I think that I don't expect changes there either in the report Tuesday.
Okay, I think the big portion of our conversation, we wanted to gear it towards soybeans today because they've been impacted so much from the news this week, and we're going to start here with a social media question. Tim from Crookston, Minnesota would like to know, can South America cover China's soybean needs, and how long can China go before they would have to buy U.S. beans?
China is expected to buy about 100 million metric ton of soybeans. The maximum Brazil is going to be able to export is probably 75 by most estimates. So there's a gap there that they're going to have to come to us to fill. Now, I thought this week's export numbers were particularly interesting because the majority of the purchasing was done by unknown destinations, presumed to be China.
Okay.
So you wonder if China isn't making a calculation that, okay, we can get X amount from Brazil, we need an X amount. How do we've already bought some U.S. beans. How do we buy enough to fill that in before all this potentially dust up becomes a problem on May 22nd? So we may very well have decent export sales to China over the next 6 weeks as they make those sort of calculations. So it could be a problem farther down the road, certainly, and if this persists and it blows up on us, it's going to make us the residual supplier. Now, you know what the Chinese are going to do. They're going to say, we'll pay X amount for Brazilian soybeans, but we'll pay substantially lower than that to incorporate those extra costs because of the tariffs for U.S. beans. So it's gonna be a price negative thing for sure on beans if it persists or actually anything comes of it.
And with that being said, do you expect other countries to start looking to the U.S. for soy needs as China has kind of maybe backed off from buying from the U.S.?
That already happened. Europe canceled the Brazilian purchase and moved the origin to the U.S. this week. The number I hear on that is about $100 a ton. If they can get our beans for less, 110 or $100 less than Brazil, they're gonna start switching back. So that's the sort of thing that's going to happen too. Is that if Brazil becomes a primary supplier to China, other people are going to gravitate toward U.S. beans. So that's going to minimize maybe that a little bit too. And maybe that's part of the reason beans were only down 11 cents when all was said and done this week.
Yeah, I mean, when we look at the end of the week here, it wasn't as bad as what we had saw earlier in the week.
I mean, we can't discount meal either. You know, a big chunk of the world's meal is supplied by Argentina.
Right.
A couple of their mills are down. Processors are down because of strikes, worker strikes down there, and our processors are running full blow to try and produce enough meal. So I think the meal is going to be a supportive factor to the soybeans too for a while anyway.
Absolutely, and maybe let's continue that discussion in Market Plus, which can be found online at iptv.org/MTOM. I want to take another social media question here as we transition into livestock. Gord in Manitoba, Canada would like to know, when will we see the larger slaughter numbers in cattle that Cattle on Feed reports have been calling for the last 6 to 8 months?
Our expectation is that's going to happen sometime in this April to June time period, April, May probably. We're getting to that. But they beat cattle up pretty hard this week. Yeah. Part of that was the tariff discussion, but part of it is just expectations for a lot of numbers. We haven't had really great weather for grilling yet, so we're sort of waiting for that to develop. But in answer to the question, probably April, May period here.
Okay. And when we look at the cattle complex, we had quite the roller coaster of a week this week. With prices as low as they have been, why aren't processors killing more?
Yeah, that's a good. Well, I think that's a demand-driven thing.
Okay.
You know, exports have been quite good. There's some concern about that, but you know, a lot of those exports to China go through Hong Kong, and Hong Kong's not included in this. So that sort of minimizes the. Again, every one of these issues you look at on tariffs, if you kind of pull the covers up a little bit and look under, there's some underlying reasons why maybe it's not going to be as bad as the headlines make you think.
That makes sense. I like that analogy. Pull the covers up a little. We saw also a key reversal this week for both feeder and live cattle. Do you fundamentally think that we have bullish fundamentals ahead of us, or are indicators supporting here more bearish news in the cattle complex?
How far ahead?
Well, that's the question, of course.
No, I think at some point that's going to happen, but it's sure not going to happen in the next 3-4 months.
It's we're looking very long term for that.
To work our way through these big numbers and get all that beef eaten before things are going to get much better.
Okay. Let's end the day, of course, with the hog markets. We were limit down here, almost limit down, touched limit down at one point in the week. Have we put in a low for the moment when we look at the June contract specifically?
It sure looks like it to me.
Okay.
We kind of tried to retest them and couldn't. I think we'll probably see some strength come back into that market next. It looked like Wednesday or Thursday we're kind of trying to do that. And then we had this sort of quasi announcement of maybe look into more tariffs. It came out late Thursday afternoon late, and then that tanked them on Friday.
Absolutely.
But I don't really think that's going to, as we go into next week, I think what the market was trying to do on Wednesday, Thursday is probably going to come back in. I expect to see some buying support to the hog market and the cattle market next week.
And the April the April hog contract, is almost off the board here.
Right.
There's a $21 difference between the April contract and the June contract. Do you expect the June contract to drop down to meet the April levels, or is there a reason that we're keeping that premium in the June contract?
No, I expect that to reconcile itself. The June's probably going to end up where April is, probably.
Okay. Tomm Pfitzenmaier, always a pleasure.
Oh, thanks, Delaney.
That wraps up the broadcast portion of Market to Market, but we will keep the conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at iptv.org/MTOM. Looking to avoid our social media channels, but still want to let us know how you feel? Send an old-fashioned email to markettomarket@iptv.org. Join us again next week when we dive back into the trade waters impacting rural America. So until then, thanks for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.